But let's look at the facts. Palantir Q2 revenue of $678 million, an increase of 27% from the same period last year. This was an improvement over 21% growth Palantir reported in the first quarter of the year. Palantir expects its revenue to land at about $699 million in the first quarter at the midpoint of its guidance range. This is very important to understand because I think it may be too late to buy Palantir right now, and let me tell you why. If you look at the numbers, this would suggest an improvement of 25% from the same period last year and is well ahead of the $681 million consensus estimate. Palantir has also raised its full year revenue guidance by 2% from the prior range to almost $2.75 billion right now, indicating a top line increase of 23% this year. However, investors should note that the commercial customers that have rapidly adopted Palantir's artificial intelligence platform to quickly integrate AI into their operations has already occurred. And looking into the future, I do think it's very bright, and Palantir is expecting its revenue from commercial customers in the US to increase 47% this year to more than $672 million. However, I am questioning if over $30 per share is going to be a profitable price to enter the stock. So I have a better idea. I was completely spot on with the stock, by the way. I'm going to show you a very good example of what I'm doing right now with options. However, I want to point out that we need to be logical investors right here. And I am personally not a fan of chasing a stock. In fact, I would say never chase a stock, no matter how good the business is. I talked to insiders working at Palantir. As usual, not insider information, but insiders working there. And some of the workers also told me that their last job was at Synapse and they prefer to build apps on Power BI and Power Apps way faster than they could on Palantir. Other of my students work at Snowflake, which is also growing their business. So Palantir isn't the only solution. And while I'm super bullish, I am not buying hand over fist on the stock right now. I have a better idea on entering the stock and using put options to enter the stock cheaper than $30. I'm going to show you an example from a month or so ago, right before Palantir ran up. So this will be the most important 8 minutes to watch if you want to scale your portfolio by selling put options and make $10,000 per month. But before I jump into my portfolio, I just want to say that selling put options is literally the most consistent strategy that I've ever come across. I've literally read a book, I've been on Wall Street, and every single resource that I've come across, selling puts is the most consistent income strategy because you're buying stocks for cheaper than they're trading at today. So let me explain. If a stock is at $100 or $110, you can sell a put option below the current stock price, and then you're getting to buy the stock potentially for lower than it's trading at right now. So let's jump into some examples. I want to show you some live examples in my portfolio. So right here, as you will see, I am selling quite a lot of put options. You can see here I have American Airlines. You can see I have Palantir. You can see I have Snapchat. I love selling put options for income, and specifically I have a student right now that is making 2% per month selling put options. Now you may be thinking to yourself, that's not a whole lot of money, but when you talk about consistency, 2% per month is actually a really good return because that's something that you can retire with, okay? So for me, if I can make 2%, of course, you can go higher. It just depends on your level of risk. But consistently hitting 2% per month is possible by just selling put options. So this is one of the best retirement income strategies. The way I would go about this is I would just pick a stock that you like. This is the most important thing that you can possibly do, because if you're going to sell put options on stocks that you don't like, if you do get assigned on that stock, well, that's not really a good thing. But if you want to own the stock anyways, so say that you really like Apple and you sell Apple 160 put, okay, going into Apple right now, if you were to get assigned, that wouldn't be a bad thing. That means that you would get Apple at a good price since the stock is currently at $170 per share. So when selling put options, the number one thing that you want to look for is a stock that you want to own. You also want to find a stock that has a good support. So how do you find support? You basically want to find a stock that has already been trending down or has already hit a level where it's unlikely to go below. So you can see here that over the past 3 months, Apple has kind of bottomed out and had a decent bounce even from the March level of 169. It is showing some signs of just going sideways right now. Plus, not to mention, Apple is a really good brand. So if I were to sell a put option right now, it would be on Apple. So I would just go to Apple options, okay? Then I would go into sell put option. Now, the best expirations for put options is it really depends on what you want to accomplish, okay? So if you want to go for a weekly income, you can sell options that are expiring every single week. If you want to go for a monthly income, you can go for options expiring every month. One is not necessarily better than the other. So whether you collect $1,000 in a week or, $4,000 in a month, it's the same amount, but you get more, more permutations in the weekly strategy. You get to see it more often, you get to have more experience, but in the long term, as you sell options, as you get more experience, as this stuff becomes more easy, consistent, and passive for you, I do recommend going for monthly expiration. So I'm going to show you a 1 month option expiration. I'm going to make, the option expiration right now, May 24th. If you're watching this in the future, it doesn't really matter. Just copy the same logic that I'm showing you with, put options right now, my same thought process, and just do it for your favorite stock, whether that's Apple, whether that's Google or Amazon or any stock. But I will say that you don't want to do this strategy on a stock that doesn't have much liquidity. I'll show you what that looks like in just a second after I finish that Apple put example. So check it out. If I were to go ahead and sell a put option at 160 and I expand this right now, you will see that the bid here is 176 and the ask is 182. What that means is if you were to be a buyer, you would be kind of forced to buy closer to 182. And if you were to be a seller, you'd have to kind of sell it closer to 176. The thing is, that's not necessarily a good thing. Well, it's actually not a good thing at all. That's why you want to find a option that has a tight bid-ask spread. Now, this is actually considered tight. This is a $6 gap here. So that means that you're losing about $3 because you're probably going to get filled by about the midpoint. Okay, so if you were to execute this trade, you wouldn't get 176. You also wouldn't get 182. You're going to be executing somewhere in between. So about 179. Okay, so if you were to sell this option, you would get paid $179. Okay, by opening up one contract. The delta here is 0.21. So there's a 21% chance of this happening, which means that there's about a 79% chance of this not happening. So if you were to sell a put option on Apple right now, this is why I love this strategy so much, is you would only get assigned about 1 out of 5 times. That means 4 out of 5 times you win, and the 1 out of 5 times that you lose, you don't actually lose, you just get assigned on Apple stock. This is exactly how I would open up a trade. I would look for an expiration date of 28 days. I would also pick a strike price that is well below the current stock price. Now, keep in mind, if you go lower, then you're not going to collect as much income because the lower that I go, the lower the income becomes. But the closer I am to the stock price, obviously it's going to be more expensive because your risk of getting assigned is also a lot more. So if I go to an at-the-money option is basically something that's right at the same price of the stock. You can see here how the delta is 0.46. So that is pretty expensive. Now, what we're going to talk about right now is how to manage a sell put. Okay, this is really important because a lot of people open up a position, they don't know how to close it. But the good news is by selling put options is actually one of the most simplest strategies ever. Because when I sell a put option, the only thing that I do is I wait until expiration. So at expiration, what happens is either it's out of the money, which is cool, and then I just wait over the weekend and on Monday I will sell another put option. Or on Monday, what I'll do is if I got assigned the shares, that's totally fine. I wanted to get assigned the shares anyways. So either I can hold those, shares of stock, can wait for it to recover, I can just hold it for the long term, or I can turn around and start generating income with those shares. I'll drop you a video about covered calls. That's the covered call strategy. But I want to show you another example of selling puts and what I would not do, as well as best tricks of how to make more money consistently by selling put options. So I have a watch list right here, and I would basically look at, different stocks that I like. So right now, these are the stocks that I hold: Apple, Amazon, American Airlines, Palantir. So let's just go into Palantir right now because Palantir is a favorite of many investors just because, for many reasons. Palantir has a lot of innovation. They are growing a lot, as well as the stock share price is also just very good because selling a put option is only $2,200. Because essentially when you sell a put option, you need to have the capital there to potentially buy that put option. All right. So potentially buy those shares, 100 shares. So 100 shares would be $2,200. Okay. So essentially it would be $2,200 if you were to get assigned. So what you would do in this example is you would just, again, go to trade Palantir options. Now, what I would look at is I would look at selling put option. I would go for a lower delta, just like I was mentioning in the previous example. Now you can go for really short expiration days. Like there's nothing wrong with that. You can go for like May 3rd, for example. That's a week out. And if you were to go a week out, you're going to collect a lot less premium and you're also going to be trading more often. So it is a bit more work. I don't know if I would recommend that, but it is really exciting to go shorter term. So you can definitely practice by doing weekly option trading. So for example, you can go for the 21 strike and just sell a put option. So in this example, you would collect $30. And yes, you are technically having a max loss of $2,070, right? It says $2,070. Well, the truth is you can't lose $2,070. You can if the company goes bankrupt, but
That's not going to happen. So when it says $2,070, that's not really an issue. What you should think about is, do I like the stock? Am I ready to buy it? Don't worry about the max loss whatsoever in this example, okay? In this actual trade that I'm probably gonna place once the market opens up. So here you'll make $30, which is actually a little bit over 1%. It's 1.5% in a week. So if you were to do this, 4 times, basically 4 weeks in a row, you would collect 6%, which is, more than the 2% that I mentioned. But of course, I'm trying to be conservative here. I don't ever wanna push the dream. I always want to be very realistic with the results. So 2% with just selling puts, yes. Obviously other strategies and option trading can make a lot more. I have some strategies that are on this channel that can double your money, right? That's a bull call spread. That's more of those aggressive strategies. But for just the most safe passive income, selling put options, 2%, maybe 3, or obviously in a bull market, you can make a lot more. So back when Tesla was going up a lot in 2021, I was selling put options on Tesla. I was making way more, 1% a week easily. So 1% a week is actually one of my biggest goals. That's a goal. And usually I am able to hit that because I'm mixing other strategies in my portfolio, not just selling puts. So I am usually able to hit 1% per week, but obviously that's a fantastic result. And that is something to strive for.